Hello, I'm Donna Sawyer from the Finance News Network, and joining me from Australian Ethical is Smaller Companies Trust Portfolio Manager Andy Gracey. Andy, welcome to FNN.
Nice to be here.
Andy, tell me about yourself and your investment style.
I've been at Australian Ethical Investment for around 9 years. I'm naturally a value type investor. The investment universe at Australian Ethical is more growthy, so we basically describe our investment style as GARP, or growth at a reasonable price.
How much do you manage and what percentage of client money is invested locally?
The fund currently has 300 million in terms of funds under management. It's 100% domestic equities. In terms of where we invest a lot in medical technology and information technology, and we're 60% weighted in terms of smaller companies or companies outside the ASX 100 and 40% weighted towards ASX 100 companies.
Reporting season is behind us now. What's your assessment and what were the standouts?
Overall, we saw the market in terms of earnings per share across the market down around 3%. This is made up of industrial companies and bank shares where earnings actually rose over 5%, while mining service and mining companies earnings were down 27%, so they're down heavily. In terms of standouts for us, we had GBST, which is a small software company focusing on wealth management and broking. They had a very solid result, ahead of expectations, and the market got quite excited about that stock. Certex, which is a medical device company, had a good result. We're very pleased with that. And Suncorp had a good result announcement.
In terms of your portfolio, did reporting season cause you to reweight your exposures?
Look, we're continually pruning the portfolio, adjusting portfolio weights. We've seen during the last few months, we've actually exited some individual stock holdings because of valuations being exceeded. We've also been more active in terms of the IPO market and also some of our companies undertaking placements. And we've also been buying some of the names that we hold that have been underperforming.
So what are your three biggest positions and how do you fit that into your ethical investing charter?
Okay, our largest position in the portfolio at the moment is a software company, GBST. As we've talked about previously, GBST is involved in wealth management and broking, generally kind of back office functionality in terms of software. That's our largest position. We also have large holdings in internet service provider, iiNet, and also IT services company, Oakden. All three of these companies fit under the ethical charter on the basis of efficiency, and that they promote efficiency or better ways of doing things.
Now to the local economy, what are the risks?
In terms of the risk to the local economy, we're seeing mining capex really come off. So what we really need is another sector, and the market's looking at the housing sector to make up that void, if you like. So we're really looking at GDP of between 2 and 2.5%. However, if the housing sector, which is looking pretty good at the moment, if the housing sector falls away, the risks are that GDP may fall short of that 2.5, because mining investment is coming off in a big way, so we need something to fill that void.
So what happens when the RBA stops lowering rates?
Well, undeniably, asset prices, equities, property is getting a free kick from lower rates. We expect to see another 1 or 2 interest rate cuts in the next 12 months, but we also expect interest rates to remain low for the foreseeable future.
Let's talk about performance. How have your local funds performed relative to your benchmarks over the last year?
Over the last 12 months, the Smaller Companies Trust has done 24.6%. This ranks it in the second quartile in terms of the Mercer survey. This is the year to 31 August 2013. Over the 6 months, the fund has actually done 8.7%. This is actually ranking the fund number 1 from over 100 funds, so we're pretty pleased with that performance over that period.
What about your long-term performance?
While we're thrilled with our 6-month performance, we're really focused on terms of long-term performance, and we're pleased to say over 3, 5, 7 and 10 years, the fund ranks in the top quartile of all funds as measured by the Mercer's survey. We're also pleased with our 10-year performance data, where we've done around 9% after fees against a benchmark which is at 6%.
Finally, Andy, what's your outlook?
Well, at the moment the market is wrestling with very low historical interest rates. The market is also wrestling with the fact that governments are slowly withdrawing in terms of fiscal spends are coming back. So we expect interest rates to continue to fall, and I think the low interest rates will be overall supportive of the market.
Andy Gracey, thanks for the update.
Thank you very much.